Hey traders, Stephen Kowitzel here with thetradersplan.com. It is Friday, April the 29th. I'm shooting this right at the market open, right as the market is opening. Let's start with the S&P 500, then we'll look at the Nasdaq, and then we're going to look at some of our top ETFs of the week. Where is the money flowing in? See if we can get some good ideas today and for the rest of the week. So let's start with the S&P 500. Now, I want to look at the S&P 500. You can see kind of right here, it is getting close to a reversal pattern. Okay, the pattern needs to close. It needs to close today, and needs to close above last week's close. But you can see right here, I moved it to a weekly chart. So if this close above last week's close and the volume comes up a little bit, you should get a weekly reversal pattern. So just kind of something to keep in mind. And we had another reversal pattern a couple months ago that hasn't been taken out yet. The lows hasn't been taken out. So I was doing a training session last night where I was talking about, I understand there's a lot of negative news out there, but this is right here, you can see strong trends come out of ugly markets. You see the bear market of 2020, you had a major run, and then you had the bear market of 2018, you had a major multi-year run. So don't get too negative no matter what the news says. Pay attention to what's on the chart. We'll take it day by day. Let's look at the daily chart real quick. You can see we're really in the S&P 500, we're kind of really in a zone. Right in this area. There's no perfect point to say, the market's finding support. One could say it's finding support right around here, and here. It's finding closing support. So, I can make the bullish case and I can make the bearish case. But, the bullish case is, for now, this support is holding. It's been touched 1, 2, 3, 4, 5 times. Also, we could get a weekly reversal pattern. Also, if you look, this looks like one giant head and shoulders pattern. There's the neckline. So you got the shoulder, the head, the shoulder. All right, that's the bullish case. The bearish case is it's in one giant ugly trading range, and it's 1 or 2 bad days away from taking another leg down. Okay, but so far support is held. So I'm looking at this at the glass half full until it breaks. I'm looking at this in the glass half full. So you might be asking, there's a lot of whipsaws in a trading range, and you don't want to get chopped up and spit out. One good rule of thumb when it comes to discretionary trading. Now we follow our rules with the weekly reversal system, right? With all our other rules, with those systems, we follow very specific rules. But if you're kind of wondering the gauge of the market, you might say, is the market above the 20-day moving average or above the 50-day moving average? You kind of got the pink line right here and the orange line right here. And sometimes it's good to hold off on trades in a volatile environment until the market moves above those lines. That way you're not, trying to catch a falling knife, and every 2-day bounce you get hit, and you get a 2-day bounce and you get hit. So you're going to pay a little bit more if you follow a rule like that, but you're going to avoid the death by 1,000 cuts. So just a good market gauge, just a little tip or trick to help yourself. The Nasdaq is definitely in worse shape. It undercut March lows on Wednesday, and then had a big day yesterday in the market, helped by Facebook, was up a lot. So, this looks a lot uglier, but again, I'm looking for bullish setups, and until this just absolutely keeps breaking down. Sometimes it's really healthy for the market to have a really sharp drop, because the sharper the drop, the stronger the snapback. Okay, so these flush out, these undercuts, just like we have the reverse pattern. The reverse pattern just kind of undercuts everybody, runs all the stops, and sucks in all the bears, and then it usually comes back, and no one wants to have anything to do with the market, and then that's when it makes its big, strong run. So just kind of keep in mind, be willing to bend with the wind and take it day by day. So let's look at the top ETFs of the week list. Normally every week I look at the top 10 to say, okay, are there any setups in the top 10 that, where money is flowing into this week? And we'll go through a few, but honestly, there's not a lot of good setups in the top 10. I found some other good setups that I like, something to kind of keep an eye on. But, you have Nat Gas which is incredibly strong, but that's incredibly extended. I'm not chasing that. You have an Egypt ETF, which, I mean, you could say that's breaking out of a bullish downtrend right there, or it's getting close to breaking out, but it's still in a downtrend. I would, when you're in a downtrend, you expect the attempted rally to fail, just like when you're in an uptrend, you expect the pullback to hold. Okay, so there's not really a whole lot good in the top 10. So I was looking at some of the stuff that's been strong on and off the last couple of weeks that are maybe setting up, and let's look at a few of them so I can kind of give you some ideas to ponder. Let's look at this. I've noticed the Reits. This is a IYR. This is a real estate trust. And, I've noticed a lot of the individual REIT stocks are setting up with a nice cup with handle, just like this ETF is. You have the ETF. It fell back deep, right? But has the depth is really only 17%, which that's about in line with the market. But you can see it's pretty nice and orderly. It's not as choppy as some of the other charts. It's got a nice cup with handle. It did break out a couple weeks ago and has pulled back. Now, and that's reasonable because the market has been under pressure. So it's opening up down a little bit today. But I would say if REITs, kind of high interest rate type instruments that usually do well, if they kind of can come back in here and try to retake 110, you could really try to enter with just a stop loss under Thursday's reversal. Right? Just kind of have a tight stop there and see if it can kind of re-break. Okay, so, and if you look at a lot of individual REIT stocks, they're looking very good too. But, just like anything, the market's volatile right now. So that's not a bad idea. Another more aggressive idea is, something that has, I think, a lot of snapback potential. I notice a lot of cloud computing stocks, like yesterday, for example. This ETF was up 4%. So if the market does bounce off the lows, we have a double bottom test right here. This is down a lot. Looks like it's down 50% approximately off its high. I think this has a pretty big potential if we can get a rally. Growth has a pretty big potential if we can get a rally. So for the more aggressive non-inflationary stocks, you have a major bounce right here, and you kind of have a retest right in the zone. So you kind of just, probably with this, something like this, you want to make sure the market is in good shape, and this might not be a bad test right here. So this looks pretty decent right here. Honestly, you have a lot of the growth stocks that have sold off, so you're really looking for that, bottom support bounce like this, whether it's tech stocks or, a lot of those growth stocks really look the same. So there are some commodities that are still, in my opinion, looking good, and maybe something worth keeping an eye on. I want to look at this sugar ETN. It was looking pretty strong until it pulled back, but over the last couple weeks, you had a lot of commodities pull back, kind of consolidate along with energy and some other things. So, it's coming back. You can see this sugar, it broke out of the cup with handle pattern. It broke out of this, very, very long consolidation and pulled back, and it found support at the 200-day moving average. Not a bad place to stick your toe in the water. Maybe you can let it see if it bounces. If you get a bounce in it, then you can just put a stop under Thursday's low and just kind of play that bounce with a target one just above this $10.18, right? Kind of want to see if that can get taken out. But you have a breakout, you have a pullback, and right now it's sitting on long-term support. You can see that it's found support around this area. It's not a perfect line, but it's found support around this area historically, and then you did have an all-time, at least a 52-week breakout. So that looks interesting. As far as energy goes, let's look at the XLE Spider ETF. We did pretty well with this in one of our trades, had a really, really nice trend. It really went into consolidation mode. Last Thursday, Friday, and Monday were really, really rough for energy. Like, it just sold off hard. But the interesting thing is it reversed and it came right back. And if we go to the weekly chart, You can see right here, you have a weekly reversal pattern. If this doesn't sell off by the end of the day today, you have a weekly reversal pattern in this energy ETF. And I feel confident most of the energy ETFs are probably going to look similar too. So when you're looking for reversal patterns, you want that broad participation, because birds of a feather flock together, right? You want them to all move in line, because that means there is a lot of support, not just in the individual trade, but in the industry as a whole. So this is really one to play, and honestly, I don't think high oil prices is good for anybody, but if you want to try to offset that high gas price, maybe you play some energy stocks to try to make some money off that. But this is the daily chart, and we just looked at the weekly chart, and the weekly is looking like a weekly reversal pattern in the making. So I hope this was helpful. Let me know if you have any questions.